You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I think inflation will reaccelerate in a year from now. And I think the Fed is going to be put in a very difficult position where they will not be able to reverse again what they're trying to do, which is they're now trying to cut rates. I highly doubt they're going to be able to do, raise rates again. And when the market realizes that inflation can go higher and the Fed won't do anything, I just don't understand how we live in a world like that and gold stays at 2,900.
Welcome to Mining Stock Education. My name is Brian Lenny. Today with me, I have Tavi Costa, market strategist at Crescat Capital. In our conversation today, you are going to hear Tavi's views of the U.S. economy, emerging markets, portfolio allocation, AI's impact on commodities, and what differentiates Crescat from its peers. Tavi, it's great having you. In a tweet yesterday, you had a picture or a reference to an article, and you talked about the curse of I think, being featured in that article. And what you mentioned, your concern was about the U.S. spending 5% of its GDP on interest payments. And I was wondering if you could give us more detail on that concern and how you think that this drama might play out over the next year or so.
Yeah, this is an important aspect because we're probably going to see the bigger need from the Federal Reserve to reduce rates relative to other places in the world, given the fact that we have this situation where interest payments is creeping up to become now 5% of GDP and will likely be much higher in the following years. And so we have to pay attention to that and think about the implications of that sense of urgency by the Fed on currencies. And I think that's going to have a negative impact on the dollar versus other currencies. I think that the hard assets appreciation, which is another form of inflation or form of how things can develop, given central banks being so limited when it comes to fighting inflation and other trends that are very dangerous, they trend to translate into appreciation of hard assets. And yes, I still think that will continue to happen, and it's happening as we speak. But what I'm very concerned about reminds me of the level of conviction I had in two trends that happened in the last, call it 3 to 4 years. One of them was inflation back in 2020, not 2021. I was extremely concerned about inflation. I broke down into pillars of inflation and so forth to explain how these would develop. We changed our mindset. We changed the way we would approach markets at that level and thinking that this was really a new monetary regime. Later on, we thought that the interest rate market was going to go a lot higher. In other words, the 10-year yield specifically, given the level of issuances we're seeing in the market. And now it is of my view that the next shoe to drop is the dollar. And it's not coming from a place where a lot of people come from, which is, this is the end of the US dollar, anything like that. This is not what I'm trying to say. But usually the gold trend is aligned with the emerging markets trend that is aligned with the emerging market currencies doing better. And I think that these things take time to develop, and we're in the process of now seeing that portion. And I pay close attention to moments when the market is down substantially and the dollar is not rallying. And I think that reminds me of the days when a year or two before interest rates really moved higher in the treasury market, what was the first thing we saw? Well, the COVID crash was accompanied by the fact that treasuries were not hedging most portfolios at that time. And that reminds me of now. Markets don't, a lot of times they give you a lot of clues of what could potentially happen here. And I think we have enough clues that the dollar would be under pressure moving forward.
What about foreign ownership of the debt? It's interesting in comparison to a country like Japan, where it looks like a lot of their debt is held within the country versus the States, where it's very much the opposite. And one thing I was interested to read was that the foreign ownership of U.S. debt, even though things kind of look perilous, has stayed the same or increased over the course of this year. Do you think is that a telltale sign if we start to see foreign ownership decrease that indeed, the US dollar is losing its appeal?
So I think the answer is yes to that question, but also I think there's something else happening. First, that it's clear to me that their central banks are the ones driving gold, for instance. So there's a transition into hard assets like gold itself. But also I would say that the foreign ownership of treasuries have not really changed as much as the financial media likes to claim that the treasury market is losing its demand from foreign holders. What we've seen so far, the truth, and I'm looking at data, it's not my opinion, is that Western societies have kind of, or I should say, Europe, and specifically, has drastically increased its ownership of U.S. treasuries. Basically, I would say almost entirely making up for the sales that we've seen from some other Eastern societies. And overall, for the Fed, this is not necessarily a bad thing. I mean, they're still seeing record amounts of demand for treasuries. The problem here is not that. The problem here, in my view, is that the issuance is to a degree that we haven't seen in a very long time. So when you look at the foreign ownership relative to how many treasuries are outstanding, that number has been drastically declining. Now, that's a very important number, and it probably the most important one. And so in nominal terms, it may seem like things are okay, but on a relative basis, things are falling quite significantly. And so, Saudi Arabia is another country that's been increasing ownership of treasuries recently. And, and I'm talking about the last month's reports. So I do think there's a transition into gold. I don't think it's going to be a full transition. Usually what we tend to see is the central banks at peak levels may own up to 70+% of gold versus other things, other sovereign debt or other instruments in their international reserves. But we understand monetary systems. Well, monetary systems are tied to an anchor, which is something that creates the stability of that currency. Back in the days, used to be gold. That has transitioned from gold into debt from another indebted economy. But the U.S. wasn't really indebted in the 80s. Now it is indebted, and that level of ownership is becoming kind of a risk to a lot of these central banks that are holding the bag. They're all saying that their balance sheets are worth one thing. Remember what happened with the banks here recently. It's the same thought. They're all saying that their balance sheets are worth one thing, but it's actually drastically lower because they have not marked to market. It's the same thing with the Fed, right? The Fed owns treasuries. Does the Fed really have that many, the size of assets as they disclose? If we mark to market how much you have in treasuries from 2 to 3 years ago, obviously that's not the same value, right? I mean, unless you're going to carry on to the duration of those things, which is the case how the Fed holds. But mark to market, their balance sheet actually shrank a lot more than people would expect. And so there's a lot of changes in the dynamic of the treasury market itself. And I think that we've pushed that, over the edge now in terms of how treasuries can behave as a safe haven. They do over time. But there's different macro regimes where there's different assets that can serve a much better defensive aspect to your portfolio than actually treasuries themselves. In the 70s, and the treasuries were not a very good way of defending your portfolio when markets were down. And so, are we kind of in a similar situation today? Probably. And so, those pension funds and large allocators are starting to wake up to that and are deploying some capital into gold. But we haven't seen yet the full, shift of capital that we think we would see. And that's, that's going to drive a lot of things higher. So, but we're in the process of things. People are starting to figure this out. And, gold, the gold move is extremely important, but even more important is kind of the knock-on effects of that gold move in the mining industry, and silver and copper and oil and other commodities that is yet to come, in my view.
Do you have a view on CBDCs and how they might fit into this mess moving forward?
I don't think it's as relevant as a lot of people do. And please correct me if I'm wrong. I'm always open-minded to hear different views, but I just don't see it as relevant because it seems to be more of a mechanism rather than a big change on how, of the value of a fiat currency, right? I mean, it's a fiat currency. It doesn't change anything. Calling digital or not, I'm not sure it really changes the dynamic of these things. The creation of fiat currency was a big shift, and which reminds me a little bit of the crypto space. We're still using fiat, right? I mean, fiat currencies, when they really began to be used, we're still using them. In fact, today, I think they've never been more used on a relative basis, not absolute basis, of course, but I'm saying on the relative basis. Think about how central banks today are. We went so far on the credibility of fiat currencies that central banks today use majority of their capital acquiring each other's sovereign debt, which is basically a fiat currency. It's pricing fiat currency terms to defend their own monetary system. So that is, in the 40s, that would have been unthinkable, right? I mean, if you've done that, your currency would be worth zero. And I think, it takes time for people to, change that narrative. And we're starting to see that. A crypto space was that, right? Was the idea of creating something with an anchor and so forth. But, the true intrinsic value of something that is physically there, to me is much more attractive because the things that are linked to those assets are just completely mispriced today. And, I'm talking about mining energy companies and others and emerging markets that are linked to those things. And that's really out of line with history. And that's what probably going to be becoming, much more, pronounced when it comes to portfolio allocation.
Oh, I think, and it's not that I know anything about CBDCs, but I think the link to the economy is that the government could potentially have more control about where consumer money is spent. And if you look at how the Chinese have implemented the digital yuan and, the social credit score and how that plays into their economy, good or bad, I'm not sure. But I think that's the connection that some like to take. And that might be too far out. I'm not sure. It's an interesting, to talk about the Fed being powerless. I think that's sort of the situation that might be setting up, or what I've heard you speak of in the past. Maybe, I guess the leap is that something like that might give the government or the Fed more control over how money is spent.
If I share a minute there is I think in macro, these changes that you're referring to always have kind of a escape valve, right? And so it creates something, sort of another type of movement that is sort of released by those trends. And one that comes to mind in that case is nobody wants to be in a world like that. It's pretty obvious. And so at some point it creates a shadow economy or a shadow monetary system. There's nothing better than hard assets to make that transition capable. And so I think that this only increases, and I think that's maybe your point, only increases the value of these hard assets that could potentially become monetary systems again. I mean, I think what people are missing and that I'm much more open-minded is everybody in the crypto space is thinking simplistically, and it could be right, just we need digital and all that. Like, nobody is going against that. Obviously, we're going to a digital world. And everybody's thinking, okay, gold seems too ancient, and, why would I? But they lack understanding why gold is what it is. I mean, why is, sometimes I speak with people in my age, and they claim, oh, gold is a completely useless metal, right? Why is it? Learn about history. Why is it considered a currency in the first place? It's because it's actually the most useful metal out there. And it's so useful that it became so valuable that it became a currency. And because it's so expensive and there is an abundance, which that's what makes it, the value of it from a supply standpoint, it's now not used in the actual industrial properties of an economy. So it's not the other way around. And so how much can gold fall in prices? If it falls enough, it becomes part of the economy immediately because everybody wants to use it. And so knowing that, you sort of understand that there's a floor to gold prices, essentially. It's not like it's just, like even crypto. What's the actual intrinsic value of crypto? And when people say, okay, well, what's the intrinsic value of gold? I mean, it's barely used as part of the economy. Again, if prices fall, there is a floor, right? Where every car in the world would be using gold. I would build a house of gold if gold is at $1 an ounce. And so not because I'm rich, but because I'm not stupid, right? I mean, that's I understand the value of the metal. And I think that that's a difference that a lot of people are, just perhaps not putting more value into it. And it's not to bash on the crypto space and that say, fiat currencies were formed in the same way. And look, we're still using them. So by no means I'm saying we're not going to be using crypto. We're not going to go digital. No. That's not what I'm saying at all. But maybe there's a function of gold here. There's a lot of people missing that is extremely valuable to society. The fact that it cannot be traced. Think about that. Like how many people in the world that you referred to would like to have a shadow currency system? I am not here to say that you're going to go to your grocery store and trade gold. Like that's not what anybody else is saying here. That's just not the point, right? That's ludicrous. Like I disagree with that too. Like, we're not going to go back to that world, obviously. So, I think that things have pushed too far in the gold direction just because we're all excited about something new. And they were missing the point about the history of gold itself and why is such an important metal for the monetary system.
Right. Milei took control in Argentina this year. And, as a libertarian myself, it was a victory to see someone from the libertarian persuasion get control of a country. And I think it's way too early to say that he's turned the country around. But from a mining perspective, you've definitely seen a bunch of money start to flow into the country as it's opened up. My question in terms of South America and whether Milei's effect will precipitate into any of the other countries or whether it's business as usual and Argentina is still this sort of potential anomaly in South America.
Well, the Milei's strategy and is becoming a platform for a lot of countries to potentially follow. And I think for us, this is wonderful. I would argue that the trends really started in 2016 with more of a conservative party. Like, in the US, we've always had Republicans and Democrats, but in South America, the right side or the right wing side of aspect has been non-existent. So after Trump gained popularity, which is something Republicans haven't seen in a very long time, that created a new trend. We've seen European parties arise on the right side, but also in South America. Then Bolsonaro, to my knowledge, was the first one, and I'm not here to say Milei is on the right side either. I'm just saying that these are political trends that are drastically different than the left and the ultra left of South America. When people compare Biden, Kamala Harris with Lula, I find that absurd, right? I'm from Brazil, and Bolsonaro, as a right wing, has more policies that are closer to Kamala Harris that you would think And that's not to say Bolsonaro is a bad politician. I'm just saying how left things are in South America. Like, that's way left. Not Bernie Sanders. We're talking way more left than that. Bernie Sanders would be okay as a more center left, just to give you some sense. We're talking, very extreme, in some cases, communist ideas. Like Lula is a communist, that he may hide in between, but he's a communist. I mean, a lot of people know that. We've seen him saying things like that in the past. This is not coming from a political side at all. I'm just saying, if you analyze what has been said by him and the relationships created by him in South America, which politicians does he hang out with? And clearly you understand that that's, there could be, but the thing that happened with that shift with Bolsonaro and now Mieli and others is it created a polarized world. And a polarized world in South America is key. It's something we haven't seen in decades. And I think that's one of the most positive things we've seen in his. And this is why I disagree with a lot of people that say, I don't want to invest in Brazilian equities, for instance, because there is a communist as a leader. And I don't disagree with that point, but we're in a different place. In other words, there is zero chance that, and I should never say zero, but there's very minimum chance that we could see something like turning into Venezuela when you have a sea of people that fear that, and go out on the street, to fight with the other side, to show that, their reasoning behind it and why they oppose those views. When you have that type of popularity on the political aspect, it changes the dynamic, creates a true gridlock that we haven't seen in many decades. So the divergence of ideas is something South America needs. And, now you have a leader creating a platform. If you're a capitalist and hopes for something that the world looks much less like a communist place, I'm not even talking about socialism, I'm talking about communist places like Venezuela, that's a platform we're all looking at and seeing, okay, well, now you have El Salvador and other places that are attempting things that are unique. And I don't say unique that we've never seen, but maybe unique in the sense of we haven't seen in a very long time, especially in South America. And so, the consideration from South America actually becoming almost irrelevant over the years relative to other countries in other regions of the world is something that happened over the last 10 years or so. But that type of leadership and or lack of leadership and also relevance changes over time. And I am of the strong view that we're going to see that coming back because of the need for commodities, and commodities are highly linked to South America. It's a very, believe it or not, unexplored world with a lot of potential. And those partnerships with China, US, Europe are probably going to happen here very soon. So I'm extremely bullish in South America. And I think this is a real political trend. And it would shock me if Venezuela is still where it is in 5 to 10 years from now. I actually think, I know of very smart people making very large investments in Venezuela. It could be early, and that's very bold, but I can see it. I mean, I think that there's real changes. We're very deep connected with Bolivia. We have a large investment in Bolivia ourselves. And we can see that the political leadership, not the political leadership at the top, but the leaders that are growing are of the mindsets that we haven't seen in many decades, similar to what we're seeing in Argentina and Brazil. And that those usually kind of lead other bigger changes, later on. So it's extremely optimistic and positive for the region.
Right. I worked for a Brazilian steel company for a decade out of school, and with the Brazilians would always tell me that Brazil is the next economy to emerge And, the more I've learned in life, I disagreed. I like, you know what, with the way things are going, whether it's Brazil or any South American economy, they'll always just be emerging. I can't see. But with the emergence of Malay, I tend to agree that is a huge step if the other countries can kind of go down that path and really open themselves up to growth.
Can I comment on this real quick?
Yeah, sure.
That's an important point.
Sure.
I don't think Brazil will emerge to develop economy, and I don't think that's, I wouldn't bet on that either. But and that's usually the sign you would be selling your shares and other investments you have in the space, because that's usually what happens. It has a long decade of success, and then you're referring to the Economist cover I posted yesterday on Twitter. Well, look at the Economist cover they did in 2008 of Brazil, with, in fact, remarkably similar with the Christ in Rio, doing exactly the same launch that we're seeing with that dollar bill in that magazine. And my fear is when you get to a point where people are just extremely excited that Brazil, are the next, developed economy to be and the next leader of the world and so forth, I probably am out of that idea altogether. But we're so far from that. Like I have to convince somebody to even put $1 in Brazil today that, I think in 10 years from now, we're probably going to be to that position where we start seeing all sorts of magazine covers and people saying Brazil's the new country. It won't be. We all know this because it's culturally embedded, the way it moves. There's big difference between the U.S. If you live in the U.S. like I did and lived in Brazil, you see that the cultural differences are very, very, they very distinct from each other. And I think that's what creates the foundation of countries. And unfortunately, it's hard to believe Brazil would change that. So anyways.
Tensions in the Middle East have been growing, or especially over the last couple of weeks. The killing of the Hamas leader looks like that might have been a link to the sentiment change we've seen over the last week in the gold and silver prices, which is interesting. But generally speaking, as tensions rise in the Middle East, and however this kind of goes into a bigger war or whatever, how does that correspond to commodities moving forward if we are headed to a deeper tensions?
Gosh, the geopolitical side of the Middle East is extremely difficult to get your arms around. And I pause sometimes and look at, other supposedly experts talking about this region. And I just haven't found anybody who's really understands what's happening in that space. And so you just have to perhaps step back and see how the things are worsening and most likely won't stop from here. And we've seen this types of, trends in the Middle East for many years, or for many centuries and decades. But my belief is that I think there's oil. Oil is one of the most strategic commodities out there. I find it interesting that, think about what happened with silver recently, right? Silver, just to use as an example from a macro and chart perspective, silver went up a ton from, like right after the COVID crash. Silver went down to maybe close to $10, and then it surged all the way to $30. And then we basically had a 2 to 3 year period of, just a sideways down move. I think we touched again $18 an ounce at some point, of 17 at the very bottom, and then went up all the way to where we are now. And what I find it interesting about that move is it's something similar to oil. Oil kind of bottomed at negative prices and then started to really surge after elections, went up all the way to the Russian invasion in 2022. And then since 2022, we've gone down and maybe sideways. The equity markets in energy space have not gone down. They have gone basically sideways. They've been very resilient. So I am extremely bullish oil. I think oil is one of the most interesting commodities. If I was just playing my macro trader hat, which I don't very often, but let's just think that way, I would say oil looks even more attractive than gold right now. And, that is not to say I don't love gold. I think gold is going a lot higher. But if I want to be cute, I would say oil looks really interesting. It's a geopolitical issue, asset that has lost all of its premium. It's at a major discount. Everybody that said that we're going to go to $300 a barrel, now it's saying that we're going to go to 30. And as a contrarian with enough reasons behind it, it's hard to believe we're going to go to that world. I think we're going to go a lot higher. So I'm very bullish oil, actually. I'm very, very bullish oil. And I think that's, we'll have ramifications on the inflation front. And it's hard to be living in a deglobalized environment that oil doesn't go a lot higher. I mean, I just don't understand how that, it plays into this picture. So I'm very, very bullish energy, especially now.
Energy is a huge topic, especially over the last 6 to 8 months. I don't know how many headlines I've seen from the likes of Microsoft, Google, Amazon, Meta about AI and the need for energy creation, like the 3 Mile Island restart, where Microsoft, I forget how many billions of dollars that's going to cost, but they've signed a 20-year contract for energy consumption. And I was wondering, in terms of AI, it does seem like it's the future for many of our economies. Can you have an AI economy or boom and not have an energy crisis if things sort of keep on going the way that they're going?
I don't think so. I really think that in order to make AI productive enough and I do think AI has the potential to, as a contrarian view, I do think AI has the potential to fix the debt problem in the US in a big way. I do think that that's possible. And the main reason for that is you tackle one side of it, right? You got entitlements. Look at Medicare, Medicaid. How much capital is being spent on, doctors and services and all that? It's a huge percentage. Think about hospitals and all that. If AI is able to crack that, which I think it will, I don't know what I'm talking about a year from now. I'm talking about a decade or maybe a few more from now. I can see that becoming, a huge part of the solution here for that aspect, which is a huge aspect. And it creates other issues we can come up with but I can see that there's a path to a solution. Now, what I caution people is that AI is extremely deflationary in a world that is highly inflationary right now. And the way I would see this is that for AI to perform its deflationary tendencies, it requires a lot of material. It requires a lot of infrastructure. And so to make AI deflationary, we have to go through a very inflationary world first. And it's a world of building data centers. It's a world of, rebuilding the infrastructure of electrical side of the economy. It potentially is a world where there are needs for onshoring because of the geopolitical problems. So it's a complicated place that will get there at some point, I think. But first, we need to accelerate the construction side of it, of which, knowing that, forget about everything I said and just think about the commodity space alone, which is predicated on capital spending. So if there is a lack of capital spending, we know for a fact that supply is going to be limited, right, in the future. And you have a world that I'm referring to that almost requires us to go there in order to fix a lot of the issues we have currently. So it's going to create a mismatch of supply and demand for commodities. And it's why I would never bet against that market, because I do think there's going to be a lot of great opportunities coming from that.
So, like you said, the interim leading up to the implementation of AI, or however we look at the future, inflation is most likely going to be a part of our future. The cure for high prices is usually high prices. And I wonder if, with the cost of living, I did this myself just recently and looked at what the basics of life are costing myself. I have 4 kids. It's not cheap to feed them. I wonder, parlayed to, the rest of society, because I do quite well, and how that relates to the average guy out there and what the basics of life are costing him. And if we say that, copper is going to go up in price, if all these nickel, these prices are going to go up, and they're going to go up significantly. How does that parlay into the cost of life? And what is actually, what are we actually going to be able to maintain in terms of pricing before it collapses in and on itself?
Yeah, and I think to your point, something that it has to be understood by the 1970s. By no means I'm saying it's a similar economy. It's very different. But think about how gold, silver, most commodities did very well. Everybody knows that. What people don't talk about is the volatility that these things went through. The mining industry had situations where it was down 80, 70% in some of those crashes along the way in the 70s. Silver went down a ton in some periods. Oil, boom and bust are very severe. So be careful what you watch, what you want in terms of this type of dynamic. Okay, well, I think the 70s is going to play out again and all commodities are going to go up. It's not a straight line. It's definitely not a straight line. And to your point about, that high prices cure high prices essentially is true. And this is why you have to, be mindful of that level of volatility. Now, the percentage of annual inflation that we may experience over the next decade on an annual basis, in my view, will be drastically higher than historical standards. And, if that's the case, then you have to take an approach of very long term. And you have to be watching for those rotations that we are going to see in commodities. These things are going to go out of favor to back to favor, on and on and on. Natural gas, out of favor. Will that be the case 5 years from now? Probably not. I don't know if it's next 3 months or 6 months or tomorrow we start seeing a major, rise of that commodity, but probably won't be the case. Why? Because we're probably in a commodity cycle and these things rotate. And the same will happen with lumber. Remember, lumber was the whole thing and house prices going up? Well, we'd probably go back to that. I wouldn't be short lumber today. We're probably going to go back to a world where lumber prices go a lot higher again. These things rotate, and I would be very careful not, applying that dynamic into your thinking. The same thing goes to gold, right? There's always a next flavor of the day. Now the flavor of the day is gold, and now maybe it's turning into silver. Literally 4 months ago was copper. Now people stop talking about copper. Oil, nobody wants to talk about it. Well, it's going to become the flavor of the day again. And these things will change over time. And so for the consumer, what does that mean? The consumer, it means, and this is why I think I differ with a lot of people on the technology space. I do think that we're going to see wages and salaries being a lot higher because it pushes the cost of living. It pushes, this is why we're seeing strikes, social unrest. Inflation creates a lot of issues, and this is why it creates political instability. This is why you see emerging markets have instabilities, because they have inflation. They face inflation every year, right? I mean, I am Brazilian. I grew up with inflation. This was always the case. I go now to to the mall with, this was not too long ago, went to the mall to buy a gift to a friend. My wife was like, can you go with me? And, I always love to go to the mall and other places because I want to see what's happening. And I remember when I moved to the US and I was buying these things in normal stores, and paying, $20, $15 for a pair of shorts, and I go to this mall and the cheapest shorts are $50, like that's common sense. I mean, things are a lot higher right now. I couldn't find a pair of shorts for $20 like I used to, or $15 or $10. I had to pay $50. So, think about this from from anybody's standpoint. And it's scary. Like, how can you make the case that we're not going to see more people protesting that want more higher wages and salaries? Because AI is deflationary. Yeah, but don't be too cute. I mean, these things are real. Like, there's people having to live in a real economy, and I don't care what AI will do in the next year or so. I mean, these things have to be solved now, and they're going to push, the envelope to request higher pay, and that creates that reflexivity of inflation that never stops, and it creates what we're seeing now, which is, then people get paid more, then businesses charge more, and then prices go up, and then the Fed has to see it and say, okay, the Fed can't do anything because debt is too high, and where does it all end, right? I mean, probably a much higher inflation. So, this is why I'm very focused on inflation-related trades and inflation-related assets, because I think that's ultimately where we're going to go to.
So, the idea of rotating commodities, taking their step in towards like having a bull market, and, it's being cyclical. As I find Crescat, do you allocate accordingly, where you have certain percentages in the various commodities, or do you take a more concentrated approach?
We took a more concentrated approach into mining, and biggest reason for that is, there's a lot, but one is because when I got really bullish in commodities back in 2018, 2019, my view was that they were going to do very well, but I didn't know which one to invest in. I wanted to dive into the duration of those cycles, and I realized that the mining industry has a longer duration because it takes longer for you to go from starting a company to actually providing new supply to the market. And that's why you tend to see 10, 15-year kind of trends in the metals and mining industry. And when I looked at how the valuations were, they're very depressed. They still are very depressed. But the whole point was then learning about how to, every few decades, in the decades that you have these kind of successful periods of gold and silver and copper and other metals, you always tend to see these new billionaires become billionaires. And how did he do that? And I studied them, quite in-depthly. And what I found is majority of their capital was made of early stage companies that became new companies. And so we decided to take kind of like the 1990s, which the technology trend has been, meaning in terms of capital investment, has been one of the most successful we've seen in history. So there's something to learn about the 90s and even now about how venture capitalists and all these guys made a lot of money. And the way that they bet on all these, assets, and seeing one of them pop up to become the next Google, the next, Facebook and others. And so we decided to take a similar approach in the mining industry. So we invested in a bunch of companies that we view as high quality assets. Doesn't mean all of them will become one. In fact, the majority of them don't become anything, just like the venture capital business. And you're going after those big unicorns. But the market is so mispriced that allows you to do that. Like if you're trying to do that in technology, you either know that market extremely well, or you're paying a premium for every asset you add to your portfolio. Now, when you're paying a massive discount to the market, and when you know that a high quality asset and a bad quality asset is being priced at the same level today in the mining industry, it allows you to accumulate a bunch of high quality assets and see where it goes. So this is where we decided to take that approach in exploration. And we've been dipping our toes more and more into private companies that are cash flowing, perceived as short-term mine life, that we can add expertise on the exploration side, expanding those assets and massively changing the NPV of those businesses. And so that's where we started to really spend most of our time and effort.
So is the picking of those individual companies, is that how Crescat differentiates itself from its peers?
Yeah, and I would say that if you think about solely from a metals and mining standpoint, there's different types of capital allocators there. A lot of people put money into the producers and the royalty companies. They're more consistent cash flow and allow you to do all these, allows you to run a, classic quant model and try to figure out which companies are the best. That's one approach. Then you go down to the development phase, which you're taking more risk. These companies have not become mining companies yet, meaning they're not producing minerals yet. But there's a whole engineering aspect of that phase of the industry that allows you to plan out, what my cash flows will look like, having some risk for the volatility issues that can come until you those cash flow realizations come to fruition. And so you have sort of a mixed market participant environment. A lot of capital allocators are in that camp where they understand the risk, they understand how long it takes to become a mine, and they will look at that and see what the current price of the asset is versus the NPV and figure out if those are opportunities or not. That's a very hot space for mining. A lot of people focus there. That's also not Crescat. Crescat's even down below. It's in the exploration space where people, you're literally meeting a guy who is looking for capital to finance a drill program of a property that he acquired, form a new company, and drill and see if there's something. We've done multiple of those pre-IPO, IPO, or public companies. And the thinking is always, okay, can this become scalable to be desirable by a larger firm? Number one, because we think there's going to be a merger and acquisition period, and also by the value creation of buying something really cheap that can potentially become a $1 billion company. So yeah, that's basically what Crescat is very differentiated. I don't know of anybody who is in that part of the industry as much as we are. There are a few companies that are funds that are in slightly later stages than us, meaning they're investing in companies that have already drilled. And we do too, by the way. But I would say a lot of what we do that is differentiated is that we are in a very early stage space. And so it's kind of like owning a bunch of call options. Think that way. You don't know which one is going to pop and become the new thing. But you're trying to apply expertise and team effort and activism to improve your odds of succeeding. So in other words, you think there's a prospect around, you own a large portion of that company, you put capital into it, and you make sure that capital will be deployed in the design of the drilling program that you design, that you agree with, that will be improving your odds to succeeding. And so that's kind of what we do. So I think it's very unique and one way to tackle or skin the cat in this industry.
Binary question for you, two actually binary questions. Will gold be over or under $2,900 to end the year?
$2,900. I think it's going to be higher. Yeah, I think it's going to be higher. But I personally think oil would be much higher.
How about silver, above or below $40?
$40. I think would be above it.
Yeah.
Or at least I should say, I think we're going to touch above it. And then I don't know if it gets overbought from there, but would shock me if we don't go above that, given what's happening. I think other metals may have an even more interesting move. I think inflation will reaccelerate in a year from now. I think the Fed is going to be put in a very difficult position where they will not be able to reverse again what they're trying to do, which is they're now trying to cut rates. I highly doubt they're going to be able to do, raise rates again. And they're going to avoid any type of communication that goes there. And the main reason is because of the interest payment to GDP issue that I referred to before. And when the market realizes that inflation can go higher and the Fed won't do anything, I just don't understand how we live in a world like that and gold stays at 2,900. I highly doubt that that's going to be the case. I don't understand how oil would be sub $100 a barrel. I don't understand how silver would be sub 40. So if you're of that view like I am, probably we'll see much higher levels.
Each Friday, you do a live market call, or Crescat does a live market call on YouTube. And I've quite enjoyed, especially out of the three of you, listening to what you have to say about the market. Can you give viewers more detail on why this might be up their alley in terms of watching each week?
We used to do it every week, but it's just so much time consuming. We moved to 2 weeks. So, it's just been very busy. And I think it's a smart thing to do in my view. But we share very different perspectives. I think all partners have different views in terms of, we all have fundamentally agree on things, but we have different views on how things can work. And, Kevin comes from a more negative standpoint from the economy side. Not to say that he's bullish in gold and all sorts of things, but he's definitely comes from a background. You got to understand his background and his experience of seeing bear markets and all sorts of things. So he's a true value investor, type of person who's got a lot of principles on that front. So he's got a hard time buying NASDAQ or justifying NASDAQ at these levels, right? So he comes from that kind of perspective. I think I come from a perspective of monetary dilution is sort of inevitable, and we're going to see more and more of these hard assets going a lot higher. I'm very focused on big macro trends like the dollar depreciation versus other fiat currencies, and perhaps a slightly more fresh view about the macro aspect. And then Quentin comes from a completely different perspective, which is others. Don't underestimate his knowledge about the macro side, but extremely savvy geologist. That the difference between him and a lot of geologists that I have worked with and talked to and engaged with is he has a true understanding of risk reward, of which you could be wrong many times, but if you're right one time, it can pay off for everything else. And I really respect that, because I think that's something the industry lacks in a big way, and something that other industries understand very well. And so I like where he comes from when it comes to thinking about why there's a certain opportunity in a project or a company when it comes to investing. And so, just for anybody who doesn't come from a geology world, I highly suggest you to listen to him. He's at least to see a different perspective. So I really enjoy listening to him.
Absolutely. And we'll link to Crescat and your social media in the description below. Tavi, it's been an absolute pleasure having the conversation today, and hopefully we do it again soon.
Absolutely. Thanks for having me.